Yo, what's up everybody, and welcome back to another YouTube video. Today we're going to be covering asset synchronization. Finally, I know we have quite a bit of slides to do here. I had to break it down into 3 parts because there is a lot to cover. Like, you guys are thinking you're gonna learn a lot in this video, but there's actually a lot more to learn. So in this video, we're going to be covering the easiest way to trade asset sync, okay, and the most ideal. All right, so if you're a beginner and stuff like this is really for you. We're gonna be covering reversal and continuation. Yeah, so I also appreciate you guys for 20,000 subscribers. That is fucking insane. Like, what the actual fuck? That's insane. We're currently at like 20,500 now. So my goal for the end of the year is 50,000. Now, I don't know if that's asking for too much, but y'all gotta help me get there, man. Subscribe, you know what I'm saying, like, comment, helps the channel out. What else am I missing here? Yeah, so asset synchronization. This is more so introduced through quarterly theory, right? And it is like a filter for SMT, essentially. That's kind of what it is. Now, personally, through my studies of quarterly theory, I didn't learn too much about it, like in great detail. Like, I really had to dive in myself into charts, and I created a very mechanical process for trading it. It's very logical to me, and a lot of people have found it very logical. I released it already before, just not in a detailed way like this, in a structured way like this. But you guys have seen it go around, strike switching. That's a concept I created. So a lot of this stuff, this logic that you're about to learn today, I actually created. So yeah, hopefully you guys enjoy. And let's get into it, man. But yeah, credit to quarterly theory for this concept. Now, let's go ahead and dive into it. So correlated markets. We're going to be viewing correlated markets through triads. So that is 3 correlated markets in an asset class. So if you're Forex, mainly the highest percent of correlation is between the dollar, it's the majors, right? So Euro, GBP, the dollar, and then obviously indices. We're going to be looking at NQ, ES, YM. A lot of IC traders do not use YM. That's a big mistake. I promise you, it's a big mistake. You need to be using YM. It's very, very, very powerful. Okay. Now for gold, we want to use XAU Euro and XAU GBP. Now, one thing that is extremely important when using these 2 pairs here, they're a CFD broker, so you need to actually pick the feed that opens up at 1800, just like indices do, or not indices, just like futures do, okay? Because if you don't, you're gonna be using a feed that opens up at 1700, so the daily candle opens up at different times, the 4-hour candles open up at different times. It's not gonna work out at all. Like, PSPs are not going to be correct and stuff like that. So you need to do this, okay? And if you want to use silver, it's gonna be the same thing, right? I also use silver with gold here. Forgot to put it. But if you want a silver triad, same thing. It's gonna be XAG Euro and XAG GBP. Now for the oil triad, we're going to be using CL, RB, and HO. So these are the correlated markets that we're going to be using this logic on. And without further ado, let's get to the next slide. I just drank Red Bull, so I'm hyped. I'm hyped to teach you guys this shit. It's also like 11:39 p.m. I think it's raining outside. Hopefully y'all can't hear that. But okay, so what are we going to apply this to, right? Nothing new. Universal models, right? It's everything we apply comes back to the basics, universal models, because this is where we frame reversals from, and this is where we get our targets. So our first universal model is internal to external. Nothing new. I'm not gonna spend too much time here. The next one is external to internal. And the final one is ordered pairing ranges. Now, all the examples in this video are going to be going over the manipulation ranges, because if I just show you every single one, it's just gonna be too many slides, right? So we're gonna keep it simple here. So now we're going to apply SMT divergence, 2 key levels, which of course are our universal models. So like internal to external, we're going to be using with gaps, order pairing ranges. You're going to be using with highs and lows. So this is just simply S&P divergence with highs and lows, where one market takes out a low, another asset does not. That is a Kraken correlation in the first sign of a reversal. Now, here's S&P divergence with a fair value gap, right? Where one asset trades into a gap, another one doesn't. Again, that is the first confirmation to confirming this universal model from going from internal to external. That's the only two key levels that we use and frame reversals from on the higher time frame is highs and lows and gaps. So now we're going to go into two-stage SMT variance. So we don't just frame reversals from one-stage SMT. We like to use two-stage SMT around here, which is an extra layer of filtering. So this is where you either have SMT with the key level itself. So your first stage SMT will be with a swing higher low, or maybe a gap as your first stage SMT, because that is also a key level. And you're going to confirm that SMT with the key level with one of two ways. It's either swing SMT, right? So the original swing points, that is confirming this low, because when you hit a key level, you're going to form a swing point, right? So you're going to have an SMT like this, right? Ideally in the form of a string switch. It doesn't have to be string switch. This can take out this low as well. It can be a two-stage SMT like that. Or a PSP, right? So the SMT will be confirmed by a PSP. So basically the swing formation that is basically confirming the SMT and the reversal closes also a PSP, which is a type of Kraken correlation. So if you don't know what a PSP is, you don't know what any of this stuff is, you need to go watch my other videos. I have videos on T-Trade's channels. I have 2 T-Talks videos that talk about this type of basic stuff, specifically my my most previous one. All right, that's going to talk about universal models, SMT and all that, how to put that all together, like really basic stuff. Now, if you do not have SMT with your key level, so maybe your key level is a fair value gap, both assets hit the fair value gap, there's no SMT in the fair value gap, or both assets hit the swing low or the range low, you don't have SMT there, well, you need a two-stage PSP. So your first stage SMT will be a PSP, and then the second stage SMT will be with the PSP low, right? So a two-stage PSP. So it's still a two-stage Kraken correlation, just basically after the fact that we hit the, or after we hit the key level, right? So very simple, right? Super simple. You don't understand this, you might not understand this whole video. So you need to go back, you need to backtrack, because you're gonna waste your time. There's plenty of videos that you can watch. All right, so firstly, we're going to get into applying two-stage SMT variance to universal models. So again, this is going to be, every single thing you're going to see today is going to be going over order pairing ranges, but again, you can apply it to internal to external, right? So this is where one asset, hits the low, right? And we're going to go to the high, all right? Now, whenever you're trading a triad, there's always going to be a leading asset, a middle asset, and a lagging asset. Now, for the indices specifically, and really only the indices, when NQ is strongest, YM is weakest. When YM is strongest, NQ is weakest. Typically, ES is always the middle asset. All right, that is a tip for you. It's something that is extremely repeatable. It's always the case typically. So that's something that's really valuable to learn. So you need to write that down pretty much right now. So in these specific two-stage scenarios that I'm about to show you, this is all incorporating strength switching. All right, so when you have a reversal in this sequence, right, we're gonna go over all the different types of strength switching. This is a higher probability reversal, okay, and it's more likely that all assets will hit the objective, okay, when you have a strength switch SMT at the reversal, okay? So right now we're going over reversal, okay, where the second stage is creating the strength switch, okay? So what do we notice about here? The trigger for the strength switch is a precision swing point, okay? So we have an SMT with our key level, which is confirmed by a PSP, but what do we notice about this PSP? Is that it is a strength switch PSP, because this asset here was stronger because it's creating the failure swing. Any asset that creates the failure swing with the SMT is viewed as strongest, right? In a bullish scenario. In a bearish scenario, it is viewed as weakest, okay? So if you look at this, it's showing strength by not taking out the low, right? And it's closing bearish when it should be bullish because it's stronger, right? So that is a two-stage sequence, and this is where you typically see all assets expand, but you still want to trade the asset that is creating the higher time frame SMT, okay? Right? Because it's closer to the draw liquidity, typically. Okay, so I'm also going to tell you guys which assets to trade and what scenarios. So in this case, when it's the reversal, you're always going to trade the asset with the higher time frame failure swing SMT. Okay, that is not taking the low, basically. Okay, so this is strength switch PSP. Okay, now let's get into asset synchronization reversal, where our two-stage SMT is via swing SMT. So as you can see, what do we have here? Basically an SMT, right, and a swing point, right, on all assets, but they're all closing bearish. So there's no PSP, so we get our secondary stage SMT via swing point, right, where this SMT is validating a candle 3, and this SMT is creating a candle 2 over here, right? And that is a strength switch, as you can see. It's like that inverted roof, right? From my video like 10 months ago, right? It's the same thing. I've been trading this for a very long time. In that video, I told you guys about how I was kind of gatekeeping, like majority of it. Well, this is what this series is going to teach you. I'm going to reveal it all for free. And it's going to be more detailed than anything you can find, right? Because again, I pretty much founded these concepts. I put through my own studies and whatnot, so it's not like you can really learn it anywhere. Anything you've ever learned is probably from me. Just to be real, I'm not trying to be cocky, but that's just the truth. I don't mind who you learn from, doesn't matter. We're all here to learn together. I could absolutely care less. So now we're gonna go over asset synchronization, and the trigger will be SMT with a swing high or low. So this typically happens when we get our original SMT, but we do not reverse. So maybe price consolidates, right? And we need to resweep. I'm sure you see this a lot, right? Where we reverse after sweeping at the low. Now, this also happens where you get a double sweep for the lagging assets. The majority happens there, but when you have it via strength switch, it's even more powerful, right? Because you have this asset in like EQ or maybe premium, which is switching strength for these assets in discount to catch up, right? Now, we'll go over stuff like that in a future episode that is a little bit more advanced. But yeah, this is another form of strength switching, right, for reversals. And that is all for reversals. It's very simple. Now, as far as asset synchronization, right, this is all really about SMT filtering. So how do we filter SMT? Because every single time price reverses, the leading assets is going to hit an opposing objective first. So what does that create? SMT every single time. This is the problem with ICT traders. They don't know where to look for SMTs. They don't know which one to trust because they have SMT on both sides, right? Which one do you trust? I'm about to show you a mechanical way. That's what makes this so amazing, because the whole process is mechanical and extremely precise. It's honestly insane. Like, you'll be amazed. It's insane. So this is what I'm going to teach you here today. So one of the easiest ways to tell that SMT will break is if all markets at the reversal, right? All markets at the reversal, see how they're all creating SMT. If they're all expanding away, I've talked about this many times. If they're all expanding away, typically they're all going to reach that low-hanging fruit draw that the leading asset has taken. Okay. Now, how do we know? How do we make this mechanical? Like, right? So this is where we use advanced premium discount, okay, to basically validate continuation, right? And we're looking at proximity, because what this is going to create is failure swings, right? So you're going to mark outs from the reversal low to the drawn liquidity high, okay? as soon as this asset takes the high. And you're going to look at where the failure swings are being printed at the time when we take this high, directly when we create the SMT. If they are in premium of the range, like especially OTE like this, then they are creating that close proximity. They're basically creating failure swings, right? That is a low probability bearish SMT, and it is likely that the SMT will break, right? Hence SMT break. We're going to target this, all right? So yeah, it's very simple, right? Both assets are expanding, right? Close proximity using advanced premium discount here. And this is a very, I'm not going to advanced premium discount a lot here. We're not even scratching the surface with this concept because it gets a little deep and whatnot. But yeah, this is the simple way to use it, right? For filtering SMT. Now, what if you create SMT? What if price, creates SMT? The leading asset trades the high, the middle asset and the lagging assets. That failure swing is not being printed in premium. It's in discount and EQ of the range. Well, this is likely a continuation invalidation, more than likely. Now, there is a time and place where this can actually still work, right? But we're gonna go over that in a future episode, okay? But yeah, for the most part, this is when typically this SMT will likely hold, especially if this asset over here is just like consolidating or printing, consolidation or like retracing signatures. It's more likely that this will actually hold, okay? So very, very simple and mechanical. Now we're going to get into asset synchronization. So we're going to apply those filters, right? And we're going to wait for specific triggers to resync the market. So yeah, we already went over some strength switching for reversals. We're going to apply those same 3 ways that markets, basically resync, or those strength switching variants to asset synchronization, right? So as soon as this asset takes at the high, and we apply our advanced premium discount tool, we already know that this SMT should break. So what we're simply waiting for is these middle or lagging assets to actually momentarily switch strength, right? So what are some ways we can view that and actually know that it's switching strength? Well, we can use an SMT fill, right? This is nothing more than the GxT universal sequence, right? You have reversal, expansion, a gap. You're having an SMT in the gap, but the SMT is in the form of a strength switch, right? It is basically switching stronger to catch up, right, to the actual strongest asset, the leading asset, right, to the same high, right? Because markets, they're correlated, right? So they're taking out the same highs and lows, right? But when they do not, that is the hint, right, that markets are going to reverse. We know this is fake, right? If we know it's a fake XMT, then we know they should create the same highs and lows, right? So do you see the logic there? So yeah, this is one of my favorite things to see. It's an SMT fill. Now we're going to get into PSP, a strength switch PSP, which I released a little while back in my PSP video. It's one of the most powerful concepts in my opinion. So again, it's the same logic, right? You have a cracking correlation, regardless if this is a 2-stage or not. Remember, you don't have to trade, or you don't have to have a strength switch at the reversal low. All right, there's a time and place where you need it, but we're gonna go into in a future video. You don't need it, like 90% of the time. You don't actually need it, okay? To trade it. You're just gonna trade the leading asset, right? If there's no strength switch here, you see there's no strength switch? But if there's a PSP here, sorry, I have a PSP marked here, there's no PSP. Pretend this is bearish, right? So no strength switch. Then you just trade the leading asset again. Reversal, you just trade the leading asset. It's very simple. Trade leading asset, right? Now, when this asset hits the high, we trade this asset, okay? I forgot to mention that. I forgot to tell you guys what assets to trade. So let's go back real quick, right? When we're trading a lagging asset, when you get the strength switch, you're trading this asset, the lagging one, okay? Because it will switch to the stronger asset momentarily until we hit this high, right? Same thing here. This is just simply when we get a PSP, and obviously we use swing points and key levels. So let's say we don't have maybe we do not have a PSP like or maybe you don't have an SMT fill with the gap. Okay, then what do we need? A cracking correlation in the gap. So obviously you need to confirm the gap, the key level with the swing point, and that swing point can create the closure of it can create a PSP, right? So that if you get a strength switch PSP, that is indicating that this asset will momentarily switch stronger to synchronize, right? That would be asset synchronization. So this is a strength switch PSP. Now we're going to get into asset synchronization, the trigger being a swing high or low SMT. So we just put in some form of low, right? This asset takes out the low, this asset does not. Pretty self-explanatory, right? It could even have a two-stage SMT like this. You're gonna see it a lot of times in a form like that in the continuation. And yeah, man, we're just taking a small little move from point A to point B. Now we're going to get into when you do not need to require a strength switching. And this is when the leading asset has a reason to continue beyond the most recent relevant high or low, okay? So basically, if there is a reason for this asset to continue, the leading asset, you actually don't need a strength switch to trade those lagging assets. And I'm gonna show you here in a minute. So this is an example of, remember, price reversing from some form of reversal. Maybe this is your overall draw on liquidity, okay? And on your way to the draw on liquidity, you encounter a relevant high, right? And the leading asset gets to it first. So technically, you have SMT here. But remember, if all assets expand, we expect this to break, okay? So what this is gonna talk about here is a couple ways we can basically anticipate price just to continue through the high, and we don't need to see a strength switch, right? So this is some triggers for failure to manipulate on the leading assets, okay? So displacement through the high, if the price just displaces through the high, you can confirm that with a lower time frame change in state of delivery, okay? If price consolidates, right? This is the same thing, by the way. It's just, this is a lower time frame consolidation, higher time to displacement. This here is just a higher time frame consolidation, okay? That all depends on maybe the session, right? So there's a lot of context that goes into this. For example, if this is just AM session expanding, then it's more likely to do this, right? But if this is London session expanding, this is maybe the next session, right? Then it can make sense for the next session, maybe early on to consolidate. So it takes context, right? Which we will get into in a future video, right? So anyways, if price consolidates after hitting this high, obviously this SMT, that's not a reversal signature, right? When we create an SMT, we want to see a reversal signature, right? B-shape, expansion away from the SMT. If price consolidates, obviously that's not a true reversal. So we expect that to be a fake SMT simply, right? And over here, if price retraces, again, that's the same thing, right? Expansion retracement, we should expand again. Do you see any displacement here? No. So we should continue. Right, so when you're trading a lagging asset, like I said, we want to see these one of the three failure to manipulate signatures. One of these three, right? And ideally, it's even better, like I said, when there's a reason for the asset to continue. You see what I mean here? This is the most recent relevant high. Price engaged with it. It's creating an SMT here. You see that? SMT here. But we already know there's a couple ways we already know this is fake, right? We already talked about it. What are both assets doing here? They're both expanding, right? Both creating gaps. We already know this should fail, right? When you start to add context to this, where there's a reason for this asset to continue, I mean, it makes it even higher probability. So while this leading asset is trading into this high, remember the lagging assets will trade into the high that the leading asset failed to manipulate. Okay, so again, you can get away typically with trading either one, but yeah, you don't need a strength switch here, by the way, to trade this little move. So let's say this candle here, right, it hits the gap and the high. If you get that lower time frame continuation, you can just trade these two candles right into the high. Like this PSP confirms the gap, and yeah, you can just trade these two candles, right? So maybe this asset's too high in the range or whatever, you can get a better fill or whatever on the lagging asset. You can just trade that, right? Just trade the middle asset, right? Simply. So again, these are all the different variants of failure to manipulate. So this one was displacement. This one is consolidation. So price expands. Maybe we consolidate, right? That is obviously not a reversal signature, right? We should continue. This SMT is likely fake, right? So we can still remain bullish. Now, if you do get a strength switch, I mean, hey, that's even better, right? But you don't need it, just like you wouldn't need it down here. And again, I kind of messed up here. I don't know why I PSB here. Whoops. Messed it up. But yeah, you don't need a strength switch down here either, right? You just trade this asset, right? But yeah, if you have a strength switch, that's even better though. So here is an example of retracements, right? Price expands into a high, right? There's a reason for this asset to continue because it has this close proximity relevant objective. Price retraces, and then that retracement is capped off by a cracking correlation, and that will be the trigger for price to expand again, right? So every single price movement in the market, like you can go back to literally any move in the market, right? Look at the turning point, the retracement, the expansion, the reversal. It all starts with a cracking correlation, almost every single one. So whenever you see an SMT form like this, right, it's likely just a retracement. Like price can start to retrace, okay? But any SMT that is opposing to your draw on liquidity should be viewed as a retracement, right? So any SMT that forms like this in a advanced premium discount sequence where, you know, both assets are reversing at the lows, right? They're both creating these close proximity highs. This SMT that's being printed here should be viewed as retracement. You're just waiting for a cracking correlation to form, and ideally a strength switch, right, to be the trigger to expand again, right, to break that SMT and continue that price movement. So that is all we have today as far as the slides. Now we're going to go into mini examples. That's really it, right? Extremely simple stuff. Like we don't have to overcomplicate this. I worked very hard and took a very long time to actually simplify this in a mechanical way. So I hope this helps you guys out. So let's go into mini examples. I could show you so many examples, dude, because it happens every week, every day. It's truly amazing. So let's get into CL. Yeah, this is beginning of January. So what do we see here? We see our first stage cracking correlation with this low here, as you guys can see. And it is not a two-stage SMT, right? Price ends up really just consolidating, right? Not really expanding towards the high. It leaves equal highs. So again, anytime price leaves equal highs, automatic, it's likely retracement, right? So what does price do? It creates that second stage SMT. So remember that strength switch SMT that I talked to you guys about, right? Where the second stage SMT is via swing point. So that's what we have here. But on a fractal nature, if we're just looking at this swing low as its own, you know, key level, because it's a key level, it's a relevant swing because of the space between this low and this low. If you don't know what a relevant swing is, go watch AM Trade's newest YouTube video. I will put out a YouTube video on it as well because it's a very key component. And yeah, I learned that from him. So go watch it. You will learn a lot. But anyways, we take out that swing low. The correlated markets do not, as you can see. RB does not take out that low. As you can see, CL and HO, right? We're using the triad that we talked about earlier. They do take the low. So now you have a cracking correlation, and that SMT is confirmed by a PSP. You see how it's a bullish close and a bearish close? Now that itself, this little segment price, is not a strength switch, but the overall SMT like this is, okay? So it's a very powerful cracking correlation. When you get a two-stage cracking correlation and you look on the opposing side of that range and you see low resistance liquidity, right, in the form of, you know, failure swings or equal highs like this, that is a extremely high probability model, right? So that's what you see here, right? So I'm going to take your attention to the daily here. So what do we see on the daily, right? Think about the universal sequence. If you haven't watched that video, you need to watch that video on my channel. It's like through my third newest video or something on the channel. So what do we see here? We get our two-stage Kraken correlation, right? What can this be? What kind of a model can this be? This can simply be order paying ranges. Doesn't matter, right? It's simply price hits the key level. You have the two-stage Kraken correlation, and you're looking on the opposing side of that key level as your targets. It's as simple as that. It's very, very simple. So what does price do when we engage with the key level? It reverses, right? What is a reversal signature? Expansion. What does expansion create? Gaps in price. You guys see these gaps? See this gap here on all assets? Right? This is what we can use for continuation. And this is the highest probable continuation that you can have, right? It's when you get a Kraken correlation, a gap, that internal to external movement is extremely high probability because you have a protected low at the low of the range, especially if you have, again, a reason to continue, a draw on liquidity on the opposing side of that gap, right? Look at this over here. What do we create here? At the time, we create relative equal highs, my bad. So yeah, this can be our key level, right? The previous week reversed. This is Friday. So what should the next week do? It should expand, right? What can we use as a refined key level? Remember about gap selection, right? So everything about my model is mechanical, right? We know what gaps to use. Now, if you watch AM Trade's video on relevant highs and lows, now you know what highs and lows to use, all right? So everything is mechanical here, okay? So what do we get? SMT in the gap, that is the universal sequence, is one of my favorite sequences as well, is when the candle 3 that creates a fair value gap, right? A fair value gap is consisted of 3 candles, candle 1, candle 2, candle 3. Candle 1's high and candle 3's low do not meet. That creates a gap, right? And that was created after the 2-stage SMT. So that gap is high probability. So yeah, when candle 3 is actually a PSP, we know that this is a continuation PSP because it is created after reversal, right? So one asset creates a candle 2, these assets just continue like this, do not create a swing point. If you don't know what this is, go watch my PSP video. You need to know what this stuff is, otherwise, you're just confused right now. So yeah, we get an SMT fill, extremely nice. Now we're gonna go to a lower time frame, and we're going to confirm this SMT with what? A swing point, right? So we drop down to lower time frame. What do we see? Here's your first stage Kraken correlation. What do we confirm that Kraken correlation with? Is a PSP, right? Or some type of secondary stage SMT, right? First stage SMT with key level, second stage SMT, one of the variants, one of the 3, right? Here we get a strength switch PSP. So again, it's a high probability reversal. And again, when you have a strength switch at the reversal, it is highly likely that all assets will hit the same low-hanging fruit, draw on liquidity, okay? So you can already anticipate that SMT will break when it forms, and that's what you get right here, okay? So yeah, that's a extremely nice example there, right? And the next day you can also trade there as well. So yeah, that's an example there. Let's move on. So now we're gonna go over some higher time frame stuff. Let's kind of full screen this chart here. So first, let's take you to the weekly chart here. So this can be applied to any time frame. Now I will say, the higher time frame, a lot of things can happen as far as macro things go, like war, whatever, right? When that stuff is released, it can kind of mess things up. It's very spontaneous and whatnot, very unpredictable sometimes. So I will say that can kind of ruin things. So I will say that about the higher time frame. But when everything is smooth and sailing, then obviously it can work just as well, right? So when we look here, what do we have here? We have a Kraken correlation at the lows, right? Price expands as you can see, price expands, and that's where we create our first SMT up here at the range high. So I'm gonna try to walk you through this. So where is the failure swing on the lagging assets that would be NQ and ES? Where are they created? They're created in premium of the range. You see how they're in premium? If I mark out from reversal low to target high, right? They're in premium. So they're likely to fail, right? And any SMT that's created is likely a retracement, okay? So what do we have here? A weekly order block, right? Basically the opposing candle that created the SMT. What does price do? It trades into the key level. And what do we notice about this candle right here? It does not trade into these lows. You see these lows right here? So what do we have here? A strength switch PSP, okay? This asset is essentially in discount of the range. It shows a discount. It takes out some lows or whatever, and it closes bullish. So that is a strength switch PSP, and this can resync us to highs essentially, right? So when I drop down to the daily, it's pretty much what I wanted to show you on the weekly here. We'll zoom back out because there's some stuff here, but let's kind of zoom out here. So I have a lot of stuff here because, I mean, it's at majority of the turning points of the market. Right, so let's mark out the range. Sorry, just a bunch of stuff going on here. Try to clean this up. Alrighty. So these assets are obviously in EQ, and these assets is in premium. Right, as you can see. In premium, discount. So that is a form of decoupling, right? A form of cracking correlation, right? You can see these lows are not being taken out. These are these weekly lows that we marked out, okay? So we do have a cracking correlation. So what are we waiting for? When markets are really decoupled like this is a strength switch, right? Or some form of two-stage SMT. So if it's with weekly key levels, you want to be using daily and weekly cracks and correlations, right? We're not going to use like hourly strength switches with a weekly key level, right? Let's like really space out like this, right? It's going to take time to resync and stuff like that. So if you look here, zoom in. Remember previously stronger. What did we get? Now it's going to turn to the stronger assets. Now, when it's on the higher time frame, when you have a strength switch on a higher time frame, you're going to trade the assets that is strongest for the day, right? Why would you not do that? You know what I'm saying? You're going to trade the asset that's always strongest for the day. Now, when we get to like more fractal price action, this is where strength can switch throughout the day, right? Maybe NQ takes at the high, and then ES is a lagging asset. It momentarily switches to stronger when it was weaker. That's when you go trade ES, okay? That's the difference here. But yeah, obviously, you know, if that specific day is strongest, you're going to trade that one, right? So what do we get here? A strength switch PSP right here. So you have a bullish closure, bearish closer, and then you get that second stage cracking correlation right here with this swing low. So there is your strength switch, right? So now you can assume that for the next, you know, days, weeks, we can start to draw towards opposing highs, right? So that's what happens here. Let's go back to the weekly time frame. What do we have here? This is the universal sequence here. We have cracking correlation, gap on the higher time frame. So again, it's fractal. SMT in the gap. I traded this day as well. SMT in the gap, what are we targeting? Higher prices, right? So what are you gonna see? You're gonna see this asset creates an SMT here. You guys see this cracking correlation? But again, do we think it's gonna be a true reversal? No. We can definitely get a new phase of price, right? We have multiple series expansion with little to no retracement. We create a cracking correlation. We can definitely retrace, right? But what do we see the fair swings being printed at? If we mark out premium discount right now. They're in premium, right? So it's likely to break. So all you're really looking for is some form of key level and cracking correlation to resync to the highs. That's it. We're also creating failure swings over here. So this is ideally where you want to see price, draw towards, right? And what are we waiting for? A cracking correlation. That's what you get here. So we reverse all the way towards here, right? And when I go over a video over, it's probably going to be in this series about, where markets will cap off their ranges and stuff like that. That's like a future video. But simply here, guys, like what do you get? SMT with the range low. Okay, so here's your first stage cracking correlation, followed by a PSP. And what is significant about this PSP? It is a strength switch PSP, right? So this asset was previously stronger, but now it's closing bearish. This asset should be weaker because take out the low, right? There's your two-stage cracking correlation in a strength switch sequence, which is highest probability, meaning that all assets should likely hit these highs, all right? So that's what happens here. Now you're going to see that again, what are we doing on this asset? So right now there's the SMT. Technically, we don't care about this shit. When this happens, we do not care about this SMT. This SMT is fake news, dude. A lot of people mark SMT like this, but the SMT was created here and it failed. It already did its job. It retraced. Don't keep SMTs like this. So a lot of you guys have indicators that mark SMTs like this. It's completely useless, dude. It's completely useless. It doesn't do anything. All we have here is price expanding into a high, right? You get a PSP. Okay, cool. It can be a retracement, right? What are we leaving? Equal highs here. All right, bet that this should be viewed as a retracement. And where can we cap out the retracement? A gap. Remember we talked about what are high probable ranges? Where we have a cracking correlation at that range low, price displaces away, creating a gap, right? And there's a reason to continue. So maybe look to the left. I mean, the correlated assets have a reason to continue. They're close to highs. So this is a high probable continuation play, right? So when you play price forward, what do you get, right? Is an SMT fill, right? So Tuesday's low is the gap low in YM. Tuesday's low over here is right here. So again, you don't have to have, a lot of people tell you different. I don't agree with it. You don't have to have the assets both creating gaps in the same way. That's not a thing in my eyes. I don't use it like that, and it works beautifully for me. I only have to have one asset in a gap, right? And the SMT can look like this, 100%. So this is an SMT fill to me, and it's also, again, a cracking correlation with the key level and a PSP. So this should be the candle, essentially, the second stage cracking correlation to resync price higher, because remember, we're assuming this is a retracement anyways, right? If you look at the weekly candle, let's go to the weekly candle. Let's use context when we start to think about weekly profiling, right? This is going to be, what am I doing, dude? We start thinking about filtering, right? What do we see about this weekly candle? It's already a expansion candle, so this is more just like a retracement, right? And now we're realigning with the weekly candle. So we're going to talk about how to apply multiple filters to this, right? How can you time your trades? There's many ways to even add on to this. This is already a lot of filters, but you start to apply profiling and all types of stuff like that, right? And it becomes extremely, extremely powerful. And as you see, the markets continue. If you look here, I mean, you see the same thing over and over. You see right here. This right here, it's creating an SMT technically. But we don't give a shit about this SMT because it is creating that failure swing SMT, right? We don't really care about it. Price really got to show it. Price can reverse like this, guys. It can do it. But this is where I require like displacement away. Like I really require displacement away. I will not trade the reversal. I'll wait for a gap and I'll just trade the universal sequence simply. So if you look here, what do we get? Strength switch, just in the form of the previous low. So again, this asset yesterday was weaker, but the next day it's stronger to catch up and break this SMT, right? So that's gonna wrap it up for this higher time frame segment of price here. Now let's move on to another higher time frame example here. So what do we see about this price section here? Price creates some form of Kraken correlation. Now let's try to find, I don't really see anything necessarily, like it didn't really trade into nothing that I would view as relevant necessarily, to be honest. Like, yeah, it doesn't really sweep anything. I don't really care about this low, I'm not gonna lie. It's simply just a PSP, right? And price displaces away from it, right? On YM. But what do we notice about where the fair swings are printed? Right? What do we see? This asset here is around EQ. Do you guys see that? That is not a good thing to see. If you want to see a SMT break, so if I want to see this asset switch bullish, or not switch bullish, but if I want to see this asset catch up and break this SMT, I want this to be printed a little bit higher. And when you see this sequence here, where you have the lagging assets, the lagging asset actually creating SMT fill as this asset hits the high. We'll go over this advanced premium discount, this sequence here, but it's extremely high probable. So here you simply have a two-stage SMT, not a strength switch, okay? So what truly validates a reversal, guys? I mean, it's the same shit over and over. It's displacement. So this next day here, as it displaces like this, that is the confirmation to the reversal. Now, I'll tell you another thing that I already traded this week. I traded a lot of this week, and I already knew this wouldn't do this because of the weekly profile, bro. Look what it did. Monday, open high first. There's literally no established low of the week. It's obvious. So when you add profile into this, it really eliminates one side of the market, honestly, right? And you can become very two-sided. So what do we do here? This day right here, what do we do? So now we create SMT at the lows, all right? And you might think that we have a strength switch PSP to go higher, but what did we do? This asset also expanded, and the fair swing is in premium, or sorry, discounts. That is not good if you want to see this bullish SMT hold, right? So what are we creating here? A gap. So what would that create? A strength switch SMT fill. I'll also trade this day too, right? So you get a strength switch SMT fill, and remember, the PSP, right, is the gap. It's creating the gap, and it's a strength switch PSP, right? This is like the holy grail of asset synchronization. When it forms like this, a strength switch PSP and an SMT fill, dude, like fuck, dude, it's amazing. And again, you're gonna trade the lagging asset. Look at the lagging asset candles range. Like look at the body size. It's a lot stronger, right? You see how this body is like very it's the weakest in the whole triad. It's because remember, you're gonna trade the lagging assets, right? Or just simply the asset that is weakest for the day, right? Now I also traded, what day was it? I traded this day. I actually traded this day in particular, this Friday right here. And I'm gonna show you why you can trade this and anticipate this move higher. So it really has to do with weekly profiling. I mean, this is like basic shit. A lot of the stuff we do, dude, how do I have to target 1 week, okay. So a lot of the things we do as far as framing our trades and applying all this advanced stuff, it all goes back to the basic things in trading, right? So universal models, phases of price, universal models. Did I say that? I don't know if I said that. Profiling, right? That's the thing I was looking for. So we apply all of these advanced things to all those foundational concepts, right? So it's very important to master these first. So if you look here, like why would I assume a bullish day on Friday? Well, let's go back to the daily. What are we coming off of? Expansion, okay? And what does the weekly candle look like? See this fat ass wick? See this super huge wick? What do we know about huge wicks? That they can't expand, they're gonna have trouble expanding past the opening price. So this SMT that we're creating is actually the perfect area to cap off the weekly range, right? Doesn't that just make sense, dude? Does that make a lot of sense? Like, it makes a lot of sense. So if we want to trade a reversal day, if you go to my candle profile video, I put it like 7 months ago or some shit. I mean, how do we want to form? We want to open low first, right? How does this day form? Who would have guessed? Probably opens low, right? Opens low first. So again, like, we're using profiling to filter and confirm, you know, these things, right? So if you look here, your first GxT is with the range low. You guys see that? So this asset was originally weaker, okay? Now it's stronger. You guys see that? You get a PSP at 6 o'clock, right? PSP at 6 o'clock. There's your strength switch PSP. So again, any type of second stage SMP like that is higher probability, but we must understand this is probably a retracement, remember, because look how low this SMT is in the range. It's extremely low, right? I mean, it makes sense to retrace too. Like, we haven't retraced in forever. This is a profiling tip for you guys. If the previous day expands like this very largely, and you continue the expansion in Asia and London session, New York session is highly likely to retrace, okay? So this was like the most obvious day I've ever traded, honestly. Not really, but it was really high probable, dude. But here's your second stage, something like this, right? It's also a 2-stage PSP in the 4 hour. I woke up late, so I traded YM here and ES. So you're gonna see why. So let's drop down to like the hourly or something. Right, so I traded this reversal candle or something like that. Maybe a 30-minute, it's a while ago. It's on my Instagram too. Oh my gosh, I think it's 30M, 30, oh yeah, sorry. Yeah, I probably traded this, right? So we're trading the GxT reversal sequence because we're trading a New York reversal. So the low of the day is formed from a 4-hour candle, reversal candle, has a small wick, right? So we're just confirming the low of a 4-hour candle with GxT profiling, right? So how do you confirm a 4-hour reversal candle? Is with a 30-minute or 1-hour swing formation. How do you confirm the low of a daily candle? Let's go back to the 4-hour. With the 4-hour swing. Do you see how this, like, literally everything is mechanical, dude? It's actually insane. You know what's crazy about mechanical strategies is usually they're ass because there's not enough filtering in it, but it's actually insane how good this is. Like, it's like one of a kind, dude. And it's all free, dude. Like, oh my God, dude. I wish this shit still gets me like excited, bro. What do we have here? 9:30 reversal, right? You don't create the reversal prior to the driver of the day. What do you need? The driver to reverse price. I mean, dude, I put this out how long ago, dude? It's still the same. It's always gonna be the same. It is insane. Anyways, I'm getting excited and shit. All right, this is what I traded though. It's pretty much right here actually. I took up like a positional entry. You guys can go back. It's 14th of November. Go back to see what I traded. I don't remember exactly, dude. It's like something up in here. And I think I targeted a 4-hour gap. Yeah, pretty sure I targeted this 4-hour gap, if I'm not mistaken. So this asset was above the highs. I just took it to here because it's the weakest asset, right? So it's probably something like this. Again, I don't know what, I think I might have got a retest this day too. I'm not mistaken. All right, well, great. I don't know where I don't know, whatever. It's something like this, guys. I took something like this. So this is a really good trade. Now you're gonna see the strength switching. So what is all assets doing right now, guys? They're all expanding. So typically they can all get to the same highs and lows. Now, again, it's very specific when all of them can get to the same highs and lows. And this is why I need a multiple series, video series for this lesson, right? I'm not just leaving you with questions here. I will answer every single question about this. Like, you will not have any questions because I will cover literally everything in every possible scenario, like for real. So if you look here, this is the strength switch, PSP, guys. And this is what I believe I traded on ES, yeah. So look at ES. We're creating SMT right here. Right? Is it low probability? Yes. Why? Because, go back to my slides, right? If we mark out premium discount, what do we see? It's in premium of the range. It's likely to fail. And this is the middle asset. So you always want to trade the middle asset. When you're trading a lagging asset, trade the middle one because it's the second strongest, right? The lagging asset over here is the weakest. Even though, like, look here, it's printing a bullish candle. That is the strength switch, by the way. It's a bullish candle here. Hold on. I think that was the strength switch I used. Hold on, let me see. 30-minute. Okay, yeah, for sure. For sure. Yeah, we're just so close to the high. Like, look how close we are to the high here. Right. I'm gonna trade this asset because it's closer to draw liquidity, even though it's printing a bearish close. So that's why I chose this. Now I don't know. Again, this is a really long time ago. I don't know what I used. Another thing we see here, guys, is a V-shaped signature. Right. So I probably took something up in here, like whatever this CSD is. Like, clearly we have a V-shaped signature, so that's what I can trust. This PSP out here. There's clearly a reversal. So yeah, guys, there's your strength switch PSP to confirm asset synchronization into this high, just like you see verbatim in these slides. That's how it will form. You're going to, as soon as you get the S&P, boom, right here, draw advanced premium discount. Wait for the strength switch. Ideally, there is, again, we need a strength switch here because there's no reason for this asset to continue because there's no close objective. Like, there's no close objective. Typically, I'm looking for close objectives in the form of highs and lows, or maybe I don't really use gaps. I'm not gonna lie, I really don't use gaps. I will use like a new week opening gap because that is something that really does get filled, or a new day opening gap, something like that. But yeah, those are really the two draws that I use. Okay. So yeah, those are the two trades I took this day. Again, you can go fact check them on my Twitter and stuff. I literally remember this, guys. I literally remember these exact same trades from months ago because I've been trading the same logic for this long, and I know exactly what I would be waiting for because I've been trading this wave for like a very, very long time. Again, I haven't even been taught it because I literally, like, this is how I created it. So of course I'm gonna remember it, right? So now let's get out of this. Let's get into the next example. Damn, man, we have a lot of examples here. So it looks like I have one down here. Yeah, this is gonna be pretty cool. So check this out here. So this is within that price action that I showed you guys already, where we had a cracking correlation on the higher time frame here. You guys remember that? So how do you know that we can trade this next day higher? Like, how do you know it's gonna actually work out or whatever? Well, again, where are these assets being created? Remember, in EQ, so that's a good thing to see. It's likely going to all expand, right? The reversal is likely to happen, and all assets should expand. But remember also these higher time frame failure swings. But even, you know, on the lower time frame, right? They're all going to expand. So you're going to see the decoupled price action here, right? So look at the space between highs right now, right here. So look how this asset here is creating the higher time frame SMT, but look how far away this high is right now. See how far away it is? Look on YM, the weaker asset that took out the low. Do you see this right now? So you already know they're going to create SMT. Okay, boom, we create SMT. This is, when you have a decoupled market, again, we're going to go over this later, right? You have a decoupled market like this. One asset is in discount. One asset is way above the high and deep premium because it's above the high. This is where you really want to see a strength switch, and this is where you will see it, and this is where you can use advanced premium discount. Now you're just getting extra sauce right now because I might as well explain it. You can use advanced premium discount with current daily ranges, current weekly ranges. I want you to go study this week. Go look at the new week opening gap. You can use the current week range. I traded that twice. Go on my Twitter. So if you look here, this is 1800, the current day low, and 1800 is right here. Like, look where we create this SMT. This is in premium of the range. It was in premium if I show you. right? It was in premium of the range while this asset took out the low, right? And that is the strength switch. That is the strength switch, right? This asset was weaker because it's way in discount. This asset is above, right? But now you see this asset switch strength, right? So yeah, verbatim again, how it's stopped. And yeah, that's a clean one, right? We can use the universal sequence, right? Because we have a Kraken correlation. We know our refined key level, guys, for a to form the low of day, if we're using a gap, is what? The 4-hour time frame, which I put in my video. What do we have? 4-hour gap. SMT in the gap. That's a strength switch SMT fill. Right? Amazing, right? So there you go with that example there. Now we're going to move on. So if you look here, what do we get? I kind of forgot. Oh yeah, this is, I traded this day as well. Dude, this is so great. So look, check this out, guys. So again, this is a really easy one. Like when it's this easy, bro, like you're printing money. Like it's seriously, it's extremely high probability. Everything I'm teaching right now is very high probability. But I mean, this is just it's just too easy, right? Like look here. So this is the next day. So what did the previous day? Expanded away from the higher time reversal, and we have open objectives, right? So each day we're still bullish, right? This is where one-sided narrative is really present. When you have that higher time reversal, open objectives, right? You're looking for bullish profiles to confirm that continuation. That's exactly what we get. We get a clear consolidation. We get displacement through opposing highs. Right, so what are we creating right now? We're creating an SMT here, right? See this SMT on the higher time frame? Again, we don't give a shit about it. We don't care about it. We do not care about this SMT because what are all assets doing? They're all expanding away, right? And we're rejecting lows. We're still having bullish signatures. Look how we're rejecting lows right now. We're rejecting lows. Okay, cool. So 930 expands away because we manipulated prior. Again, that's something that I've had on my YouTube channel for a very, very long time. So again, we're seeing things repeat, right? But what do? We expand, okay? And we create SMT with the previous day's high, sorry. This is the previous day's high. We create SMT with the previous day's high here, okay? But what do we notice about how price got there to the, to the high? Did all assets expand? Yeah, they did, right? All assets expanded. What are they creating? A gap. See this gap? So what do we think about this? It's very low probability, right? Because there is a failure swing here as well. Look at the close proximity highs. It's a very low probability reversal, right? We know it's probably a retracement. How are retracements capped off and how do we continue the expansion is a Kraken correlation and a key level, right? Now in this case, since it is a strength switch, or assets, created this SMT here, we want to see ideally the lagging asset, which is YM, because it did not take the high out. It's creating the failure swing. We want to see its strength switch, or switch strength, sorry, and that would be extremely high probability, right? So here is again the holy grail to asset synchronization, because it's the GxT universal sequence. We have a reversal to low of day. Again, what's our refined key level? It's a gap. See this gap here? On the 4-hour time frame? Okay, cool. We have expansion away. What's forming the low of day, right? Is 2 a.m. reversal. You see how far the open is? It doesn't create a reversal candle, but we expand away, right? That's creating the reversal very clearly. And yeah, we create a gap after the reversal. So again, that is simply a high probable continuation, internal to external move. It's a model within a model, right? Internal to external, right? This is internal, this is external, but there's a reason to continue, right? It's within an overall higher time frame model. This is technically our higher time frame draw liquidity, right? So yeah, we create a PSP here, a bearish PSP, a bullish PSP. So you already can anticipate that high probable sequence where, again, the fair value gap candle that, candle 3 basically that creates the gap is a PSP, and you get that continuation PSP like this, which is also an SMT fill, right? So I know a lot of people took this. Pretty cool to see. So I took it on the 5 minutes here. Boom. Very beautiful. Very beautiful trade. I think I took only like 2R on this. I think I've extended it a little bit. Something like that, right? So yeah, that was just a small little trade, right? And yeah, that's always a great framework. I'm gonna make a video about just this framework, is where price reverses, it expands, creating a gap, and it retraces, leaving equal highs. This right here, that little framework that I just showed you right there, is often how asset synchronization forms, right? Because it's going to create SMT like this. That SMT is going to create the retracement, but it's not a high probable reversal, right? It's a retracement. And the gap SMT is how you get that high probable internal to external model. And it's like the GxT universal sequence. It is the highest probable version of it, especially when it's in the form of strength switching, guys. So yeah, those are cool little back-to-back examples. And yeah, man, you're seeing this stuff really works. So let's go to the next examples. Looks like we're wrapping up here. This is a trade that I took today. So I'm recording this on, it's technically the 24th right now. Oh man, this is a long video, bro. 12:41 now. I've been going for like an hour, it looks like. So yeah, I took this on Friday, the 23rd. I did not post my trades, but here, I should have it pulled up right here. Yeah, I have this one pulled up here. So let's go over it real quick. Probably post this like maybe later, but let's go over this one real quick. So, I mean, gold is just rocketing, dude. Like, I mean, just fucking long, right? It's literally just rocketing. So I was not really interested in this price section here. It was kind of sluggish in my opinion. So again, you're gonna see the advanced premium discount sequence via current day low. So let's mark it out. Current day low, current day high, EQ, current day low, right? Way below the current day low. See that in a gap. So you're creating an SMT fill as well. Very, very decoupled sequence. It's a high probable SMT. So again, we're not trading silver to catch up to this. We're thinking that this asset can catch up to this, right? We don't have a strength switch at the lows, but again, you don't need a strength switch, guys. You need a two-stage SMT. Here it forms right here. So remember that one sequence I showed you guys? It's in the slides where SMT forms like this. First stage SMT with a swing low, or first SMT, yeah, with a swing low. And then it doesn't reverse, and then it re-sweeps, and it's a strength switch. Well, majority of the times, you're gonna get SMT like this. It's not a strength switch, it's just a re-sweep, okay? So it's like this. Think of it like this. Price expands into a low, create SMT, consolidates, manipulates, and reverses like that with SMT again. So it's just basic expansion, consolidation, manipulation, and distribution. That's what it is, okay? That's the re-sweep logic, right? That's what you get here. You can see it's just an inside bar. That's a consolidation. So when price re-sweeps, displacement, see this displacement creating gaps? It is pretty high probable, but ideally I'd rather get in down here, or obviously on this asset over here. It was kind of sluggish, right? We're creating gaps and stuff like that. This is an SMT fill here, as you can see. It's an SMT fill here. But it's right when we created the SMT with the high, as you can see. So I'm not on the trek this time at 8 o'clock. I usually wake up at like, guys, I'd be waking up at like 9:20, bro. Like 9:30 is, and this week I've been waking up really late lately. But if you look here, we clearly continue through the high, guys. You see how we're continuing through the high? So what are we doing? We're consolidating. So that is not, we're getting that like continuation signature through the high, right? So I showed you guys. It's where we kind of displace through the high and then have that close through. This is something that's taught by AM trades, by the way. Here you are getting a strength switch already. It's technically with this PSP. You guys see this bullish close? You can already see it. Bearish, bullish. But it's not in the way that I like to trade. I like to have a PSP and a key level. Like there's no swing point in this. So ideally, we didn't sweep out this low like that. We did this, ideally. We didn't do that. But now you do get it. See this bullish candle here? Bearish candle? Now you actually have a swing point, maybe to say you're confirming this order block, even though I don't really use order blocks, maybe you do. I don't really use order blocks like that necessarily. That's something you could have traded. A lot of people did. So that's how you know this SMT is gonna break, because at this point, this is where the SMT was created. We are not reversing from it, as you can see. We're like reshooting the tide, we're not reversing from it, we're just waking it, right? On the lower time frame, you're gonna see not reversing from it. We're just consolidating. So again, you get the strength change PSP. That should be your confirmed protected low right here to trade that resync. But I did not trade this. I thought it was just kind of lackluster. I just decided not to trade it. I was already in a trade. So this is why I trade in PM sessions. So I actually got greedy. I'll post a trade. I got greedy on NQ today, not EQ, ES today. Not really greedy. I was hooked to high. I think a really bad break even, bro. Like I gave a lot of profit away is what I'm saying. So it's like no harm, no foul, but it does suck still. So I was like basically neutral on the day, and I was just gonna trade if anything clean was presented. And that's when we got this. My bad, I already skipped it. We got this. So you're seeing that both assets trading to high. You see this asset trading way through it. This asset here is consolidating because it's staying in between this candle's low and high. Do you see how this candle here, this 12 o'clock candle, does not take out the previous candle's higher low? That is a consolidation. And then we manipulate into a gap, right? So that is an SMT fill. It's also a two-stage PSP. Here is the PSP. Here is the SMT. So you have a two-stage cracking correlation. But when I go to lower time frame, like the 15-minute, what do I see right here? Is a strength switch PSP. So again, I know that both assets should expand right now. They should both reach the highs, right? So typically when you see this strength switch PSP, you can almost trade like any asset, honestly, like really. Especially in the right context, because they all should expand when you get the strength switch PSP at the reversal. It's amazing when you get the strength switch at the reversal. Like if you just wanted to require that, then you do very great. The thing is, it doesn't happen every reversal. Like that's not gonna happen every reversal. All right, guys. So you want to be patient if you're gonna require that. Now I saw a little bit late, but I also did want to wait for 1400. So here's 1400. There's a couple things I could have waited for. Maybe this gap here. Like I could have waited for this gap. So what does price do? Again, every single reversal, the leading asset is going to create SMT. Look at this. SMT here, SMT here. But we need these filters, right? We need these filters. Mark out equilibrium, right? Where is this bringing? Premium. What does both assets do? They both expanded, creating gaps. It's probably fake. The SMT's probably fake. So we can trade this, right? What do we create here? A gap. What do we have here at CST, right? If you go to my universal sequence video, this is the highest probable reversal. So when you get a V shape, a gap, and a CST off the gap, take it like that. I mean, it's just like easy, right? Nothing to it but to do it. There you go. 2.5R, so green on the day. Again, it's right here. As you can see, I actually got a better fill than this. It's actually lower. Fire. So it's probably like 3R-ish. But yeah, that was pretty much it, guys, for gold here. Sorry, I don't have any Forex examples. Too late now. Maybe I'll try to add some Forex examples for the next series, right? So let's go over this here. Now I do believe, what was this one? Yeah, so this is like an SMT break reversal. So if you guys have seen my trade recaps on this channel or know me from the lens or like whatever, you've been watching me for a long time, you know that when we break SMT, we can reverse, right? So there was SMT here once, as you can see. Whoops, there's SMT here once, but when it breaks, when that lagging asset actually trades in the highs, breaks it, this is when price can reverse. See that? So that's another thing we're gonna go over later on. So we get that. You can clearly see here. And we get a precision swing point the previous day. Right? This is gonna be a little bit advanced example. We get that the previous day, right? And all assets are doing what? They're expanding away. You see that expanding away? So this is likely a true reversal because of that expansion now. This is gonna be likely the last episode. I'm gonna give you a little bit of hints right now, but if we just mark out, again, equilibrium like this, like, what do we see? We can kind of just use, we'll just use this range, it doesn't matter. And I'm just gonna split screen NQ and YM. NQ, YM. This is gonna be our last example, guys. All right, what do we see? Where is the day like opening, basically? All right, we gotta remark it. Oops. So I gotta play one more candle. All right, here we go. Oh, even better. So look how low this day is opening. You see how it's in discount? This asset's in premium. So again, decoupled market, right? They both reversed, so they need to become correlated. So if like a certain time increment creates decoupling, right? It's just like anything, right? If the previous quarter manipulated, the next quarter will expand. It's like the same thing. Maybe via sessions, maybe we created a manipulation one session, markets became decoupled, the next session will resync the market. This is where you see 930 sometimes switch strength. You might see NQ weakest prior to the driver, and you switch his strength all of a sudden. This is how you anticipate it. So the previous day, yeah, we manipulated, right? But this asset is in premium. It's opening up the day in premium. This asset's in discount. So therefore, the next day is going to switch strength. Right? There's a little bit of sauce. This is what you see. Look at the displacement on this day. Look over here. So I traded 2 times this day. Okay, I traded twice this day. Because I already know, bro. I already know what's gonna happen here. So look what happens. So here's my first trade in London session. So mark out this low. What do we do? We have not hit the low. You see this right now? We're creating SMT technically here, right? Well, this asset is above the current day's high. See this current day high? Which is created at 2200. 2200 is right here. So you're getting a 2-stage SMT, but it's a strength switch. Right? Because this asset is now becoming weaker to not only catch up this low, but also go into discount, right? And now mark out this. Where is it being traded? In discount. So it's high probability. Okay, so now we can go to lower time frame. Again, I don't remember when I took this. What do we have? V-shaped signature. So it's valid. I think I took this on a 3-minute inversion. No. That was another day or something else. But yeah, I took this somewhere. I don't remember where exactly I took it. Just go on my, this is the 14th January. Go on my Instagram. You can find it. And that's exactly what I took there. I don't remember when I TP'd exactly. I don't know. I don't remember. But it was a very nice move, right? And that's how I caught it, simply, right? If you look at the high of day, what is it created from? A reversal candle, right? So we're getting a SMT with the previous candle's high. So that's how I traded here. But I also traded it later in the day as well. And again, I was anticipating this decoupling, right? So look at this asset here. This asset took the range low. These lows were still available. So I already know that YM is clearly stronger this specific day. And I don't care about yesterday, right? Yesterday, YM was stronger. Today, it's weaker. Or sorry, yesterday it was weaker. Now it's stronger, right? I care about trading the asset that is, if I'm bearish, weakest for the day. I don't care about yesterday, right? That's a big thing to understand. So this asset, again, still hasn't reached the drawn liquidity, so it needs to switch strength to catch up. So this is why I anticipate the drivers to really have that decoupling, right? You're going to see some decoupling happening here, where one asset expands higher to manipulate, this one expands lower. I actually get in before 9:30. Here's 8:30. So the driver, let's take it back to my driver video. The driver opens up in the gap. It opens up in the gap, right? So if it opens up in the gap, price hasn't reversed from the gap, then I want the driver to reverse price. We have an SMT via swing point, as you guys can see. So I really have everything I need to see, man. Let go the 5 minute now, the 3 minute, whatever I took it on. I think it was the 3 minute. We displace, we have that V-shaped signature, guys. I mean, you don't need anything else, right? I think I took on the 5 minute. Yeah, I definitely did. Yep, 100%. So here's the V-shape. I take out here, I'm driver pairing. I want 930 to expand. That's what I want to happen here. You're gonna see what happens. So here's 930. It rolls around. We can get to it. Boom, 930 happens. Great, it's going amazing, right? And I go break even because, okay, first off, my stop loss is here, by the way. And I am up like 3R at this point. I'm obviously gonna go break even there. I don't want a 3R position to end a loser. So I go break even here, and the most unfortunate shit happens where it just takes me out and then goes in my direction. You know, it is what it is, right? That happens, man. Yeah, that's just a break even trade, but you get the logic, right? That's what's important here. Now, why did price do that? I don't fucking know. I don't know. I think it's because YM just wanted to go higher. As soon as YM took it out, then it came lower, right? If YM probably displaced lower with NQ, it probably wouldn't do this bullshit. But YM was just going the other direction, whatever. It is what it is. So that's a trade that's like the logic worked out, the execution did. Okay, and that's gonna happen, dude. That's gonna happen a lot. So you need to get used to it. That's a part of trading. And I think that sums up the video, guys. Yep, that is the video. If you guys learned anything, let me know in the comments, man. I read every single comment. Tag me on social media, all your trades. I see all your trades, guys. I get tagged in so many of y'all's trades. It's so crazy that I just can't comment all of them, bro. I try to like as much as possible, but I do see them, bro. I see all of them. You guys are fucking going crazy, dude. Like I said, my goal is 50K subscribers this year. I understand that I gotta be consistent to reach that goal, and that's what I want to do. I want to put out higher quality videos. Need to buy like a new setup or a new mic and stuff to take it more seriously. Probably need to get an editor and all that. But I have so much to teach you guys, like so much stuff to teach you guys. The highest quality education that you can find for free. Isn't that crazy? Like for free, bro. You don't need to pay me, anyone. You don't gotta do that, guys. You guys can learn for free. It's a new day and age, man. This was not around, really. I mean, you got ICT, but I mean, you gotta watch a whole lot of videos, right? That was a grind. I never watched ICT personally, but you get my point. So I want to be that guy, man, that you guys just come to. Like, I'll give you everything in the most detailed way. Try to pack it in. You see, my videos are very long. I try to go as detailed as possible. But yeah, guys, hopefully you guys enjoyed. But yeah, we'll put out the next couple parts here pretty soon here. I think I can do it each week. I think next week we can probably get to there. If you guys get me to 1,000 likes, that's when I'll probably drop it. So if you guys give me to 1,000 likes, I mean, hey, that's turns for me to drop a new video, the second part. But yeah, guys, leave a comment. Let me know if you learned something. Let me know if you found this insightful. Let me know what you guys want to see next after the series, because that's going to be a big decision. We got a lot to learn, guys. A lot to cover. So yeah, hopefully you guys enjoyed, man. You guys stay safe, stay blessed. If you guys want to support me anyway, use code GxT for any prop firms. I don't care about taking your money, but I will take the prop firms' money. You know what I'm saying? But yeah, man, I'll catch you guys later. You'll have a good one.